Okay, good morning, everyone. You're welcome to today, another brand new day, another brand new market. And today's date is on Thursday, the 10th of August, 2023. I will not be saying much because my past 4 videos, I think I've explained what is happening in the market already. So I was just looking to breaking down wherever I'm seeing in the market. I guess in it from the dollar to the gold to the US oil to EURUSD, pounds, Australian dollar, the NZDs, the USD share, then some of my exotic pairs, also like Euro AUD. You understand? So let's just dive in. So let me just rush through. As long as in the way you know, as well as the way you know Vision X is a swing trader. What we do at Vision X is, take all the swings, swing it back again, take all the swings, and swing it back again. So this is what we're known for, not just, trying to draw trend lines. I'm not a fan of trend lines. I'm a fan of, I'm always a fan of areas of value, very, very important. So I'm going to talk about where we are right now, like the dollar. So this is the dollar daily chart. And what I have dollar daily chart is actually a descending triangle, which is a bearish continuation pattern. As a price action trader, we tried, falling from this, but the US economy was able to recover, and that's why you saw that we saw this recovery. And what we do at Vision X, because we're price action traders and also market structure traders, we tend to find all these, fake out, what's it called, manipulation, because actually this was an area of value, support. Are you getting it? That got broken, and upon retest, we recover because of US data and the strength of the dollar that came in. So we don't allow fundamentals run our day, because the market actually gives you more than 4 to 8 hours to even 1 day, 3 days to plan your trade. Are you getting it? That's what we do here. That's why you see that we're always, consistent in profits, and always, getting almost all our trades right, because we'll get to these areas. We use price action patterns, and also we look at fundamentals to do whatever is happening. So for the dollar right now, like me, and do the way I do it? I don't joke with my areas of value. And what do I mean by areas of value? If you look at this gold market right now, even though it's a bearish market, you see that we are in these bullish, what's it called? We're in this descending triangle with a bearish continuation pattern, and we're at an important area right now. Where is the area? If you look at this, so on the dollar, we are still trading in between this push. Are you getting it? So if we're trading within that push, even the fake out on the zone is still a structure. So a lot of people minus the fake out of it. No, it's still a structure. This is a structure. Are you getting it? This is an impulse retracement. So the retracement are shorter, while the impulse are longer. So I'll still say that the dollar is still bearish. Are you getting it? So using the supply and the law of supply and demand, I'll drop to the lower time frame, which I normally use. So on the flip side, let me see on the weekly chart, you see that the dollar has been bearish, came down, came up, came down, found support, came up, we couldn't break above, we broke down again. So the dollar is still bearish to me on the weekly, because overall, if I bring the monthly chart in, you see that the dollar is confined inside an ascending. Are you getting it? So I really love the dollar to still come down to $94. But I am not the one controlling US economy, neither am I Jerome Powell or whatever. So whatever I see, I don't attach sentiment. I drop down to the weekly to find my weekly support and demand, my daily support and demand, and just trade those, swings out without emotion. So going further, what we have right now is, if I can refresh this, what we have right now is this particular area. So whether you like it or not, this is an area, what's it called? Whether you like it or not, this is a supply. This is a supply zone. You can see that in road what's it called there. So it's a supply zone. But overall, we are yet to come back to this, bearish pressure trend line from the previous. We have more than 3 touches. This 1 touch, 2 touch, 3 touch, which makes that line, what's it called, descending channel, a bearish pressure trend line active. So are we going to stop here? I don't know yet, but definitely because we are market structure traders, we should be able to know. Again, that's why I would drop down to the 4-hourly time frame to find out whatever is happening there, because it's very important. So from the daily, I will still label as internal structure. I will say this, an ABC move, or let me just say this is a drop, then retracement, impulse again, which makes here what a what's it called, which makes there a supply zone, but the supply will only be valid. So before I drop down to the 4-hourly, let me mark the daily supply of the dollar out. So taking from this particular previous, green candle, that's how I draw my supply. Understand? So I will drop down to the day 4-hourly chart, which I don't go down more, except probably I want to go and take entries from the lower time frame. So from here right now, you can see that when the market entered into the supply zone, so I should take this off first. When the market entered into the supply zone, we found two supply. First of all, follow. This is how I drive my market, and it has been working perfectly for me. This whole area is a supply zone, whether I like it or not, because we put structure to the downside. So making this whole area supply zones, so it must be, forget trend line sometimes. Trend line might come in and somebody was like, I've seen people drawing trend line into this, that okay, this is 1 touch, 2 touch. Now the market is breaking. I don't see the market like that. What about this area of value that you have at the downside? Is it going to break also, or is it going to come and take you out if you start taking trades and putting stop loss there? So focus more on areas of value than just trend lines. Are you getting? I use trend line, but I'm not a much fan of trend line because I love what my markets are doing, because the market itself is actually the law of supply and demand. So if you don't follow very well, you get carried away and you get thrown out of the market. The only way I will confirm that this particular daily, what's it called, this daily supply is valid is by doing what, breaking a particular area of value, testing it, and continue going down before I will become bearish. Because whether I like it or not, this is an impulsive move. Whether I like it or not, this is an impulsive move, recovering that particular. This was where we recovered that particular weekly, what's it called, descending triangle. So you don't get carried away. You focus and follow. The market is not here to worry you. You can decide to wake up anytime and you see that we've passed this area of value, we're testing, you can still enter. So I enter my trades from areas of value, and I don't just use the word trend line or whatever I'm saying. This candles are bearish, or this. The total area of value has always helped me, because if truly this was a fake out, now first of all, take this whole place out first. That is not part of what you're trading, is a fake out. So we have an internal impulsive move into, because this, sorry, let me come again. Take it that this whole place was a fake out. Are you getting it? And we have an internal move, because these are two places the market would have reversed by continuing to the downside, breaking structures like this, or are you getting a recovering what is recovered, and we enter the trade to take. So this was where I turned bullish on the dollar by recovering these previous areas of value, dating from the backside. Are you getting it? Dating from the backside. For recovering it at all, we will definitely do what, breaking structure and changing character, come back and come back to a major areas of value. That was why I was seriously bearish on what gold. So right now, what are we looking at? Right now, what are we looking at? Your Fibonacci will also help you in this sort of areas, because for us to retrace, so you can see that we will not retrace the first. Remember my word, remember this particular word. I get it. Probably let me do these things for you so that it will help you in the future. Whenever the market is going either way. Are you getting it? And immediately we got to an area of value like this, and we're going down before, but maybe a fundamental news came and brought back, we broke back into a particular price action pattern. Are you getting it? Just know that the market might have switched on you to the upside. Are you getting it? So if this market actually broke that structure, changing character to the upside, what happens? Let me go to Alicia. You see something now. The market does not retrace more than 0.382. The first retracement does not retrace more than 30% or 38%. You understand? So if you bring your Fibonacci tools in, if truly that will bounce back with good volume, and if you bring your Fibonacci tools in, you will see that the market always retraces from this 0.382 to the upside. So if I was you, probably I even gave this particular trade that day. If you go and check my Telegram channel or most of my YouTube videos, you see that we entered the market particularly from this place, and our stop loss was below the, what's it called, below the break of the break to the upside, or below the descending triangle on the daily. Are you getting it? So from there now, we know that if truly we broke and will continue breaking structure to the upside, we are not doing what we will definitely come back to another major areas of value, which is the supply, the major supply at the top. Are you getting it? And when you check the major supply at the top, what do you see? The supplies. Okay, I'll take all these things off. Don't like 13 line. The supply zone we had was this, and I drew it out. If you go back to if we can recover any major area of value, we'll go back to the next supply. So that the supply I got was this, and you can see that when we came into the supply 2 times right now, are you getting what we're getting? The only way this can become a double top is if we break the structure and change character to the downside. Remember, don't forget, this will help you going out from today. So let's remove this change of character from here and bring it here. That if this market breaks this particular structure, so if you're a price action trader, it will help you a lot. I guess, it will help you driving your structures properly well. If this is truly the supply, are you getting it? You will find out from here, because let me go to the daily, or sorry, this is not paid what's it called, account. If truly this is a supply, are you getting it? And it's not going to do a fake out and come back to this area before falling down, are you getting it? We would know from this 4-hourly chart, because if that's truly a supply, envision, know that this will now become what? A double top that came into this strong supply zone and found supply. So, and how will you know that that place is a strong supply? We will definitely change character to the downside by breaking this previous structure and retesting 0.382 like it did from the downside just now. Are you getting it? Then we will start entering. By the time we start seeing those bearish pressure, selling pressure, are you getting it? This one will now start entering, not from here, because this market still enter from here. Are you getting it? Put your stop loss above 0.618. Are you getting it? Or if you have enough, you can put above there. Are you getting it? But definitely we put above here, because if truly this is a change of character, we are not supposed to, go more than 0.382. Maybe we can do a sniper entry at 0.5, but the candle will definitely close below here and to start selling to the downside. If you look at your market like that, trust me, you will not make mistakes in this particular business. Your mistakes will be minimal. Are you getting? Because if truly this was a double top going to happen right now and this supply prevails, are you getting? Definitely we are going to change character to the downside and do 0.382. They will enter, then start knowing that overall this whole fake out was never a fake out. It was still part of the structure that would come and break structure to the downside again to continue, to continue this market. So how are you looking at your market? This is dollar for you right now. So you're going to transfer that to probably EURUSD, then transfer it to gold and the rest of them, because right now something is happening in gold and EURUSD that I want to point out to your attention, because there's a divergence currently happening right now between EURUSD and the dollar, and the dollar is a direct correlation of EURUSD. Now look at this. Let me come to EURUSD. Look at the flip side of the EURUSD. Are you getting? If you look at this structure right now, EURUSD has gotten back into, look at the structure, look at this. See what is happening right now. EURUSD has gotten to this particular place. Look at EURUSD has gotten back to this particular place. So I call that a divergence if I can break it up very well. If you notice, gold is still, sorry, the dollar is still here, while EURUSD has gotten there. So what is the sentiment? Dollar is still somewhere here. What's the sentiment happening around here that EURUSD is breaking a particular descending triangle? Is that foiling a bullish sign? Are you getting it? Because why is EURUSD in a rush when the dollar has not gotten there yet? So I will look at the dollar to complete this phase. Are you getting it? Because it might be people FOMOing and saying that, oh, we are having a double top. Are you getting it? That's why EURUSD is on a rush to continue, selling to the upside. Why dollar? Because they believe dollar is going to boost. So, but I would not until EURUSD go to this particular, sorry, the dollar gets to this particular place and break it, changing character, and then before I'll start buying EURUSD again. Even though you escape, it will not be more than maybe 150 to 100 pips difference. Are you getting? So that's where I'm trying to come from. Are you getting? So you look at the bullish case scenario, you look at the bearish case scenario. If before you make a decision in this market, you can't just make a decision. How have you been looking at your markets? But so these areas of value will definitely do what help you going further. So I look at my dollar and I look at what my other market is saying. If truly this is, I would really love this to be a double top so that, are you getting it? And this area, these supply areas to do what? Are you getting it? I would like the supply to hold and not, come here and find, a support and continue going, making this liquidity before taking us out. So there are some kind of manipulation concept that happens. So because this place might become liquidity, that the market might come and take people out, come back into the main supplies before going there, before going down. So you have to have all the manipulation concept these smart money guys are using to take people out of the market before you trade, because you can just say that come to USD, you look at the dollar and you say, oh, this is going to be, are you getting a head and shoulders pattern break and retest? Are you getting it? As it's retesting, you can just want to enter to continue going with your stop loss below that, what's it called, previous area of value. And before you know, it will just fake out and continue taking you out because you did not see the divergence happening between EURUSD and the dollar. So what am I trying to say now conclusively? I'm trying to tell you that whether I like it or not, this is an area of value. So this is the difference between the upside and the downside. Before I can start trading dollar again, I getting it and taking any entry again, which I have some entries on already, is by breaking that structure, changing character to the downside, and giving me a double top price action pattern. I getting it, then we test, then we can start, selling. What's it called? The dollar. That means buying EURUSD, GBPUSD, and the rest of them. I really didn't want this video to be much, but I find myself trying to break down my markets for you daily. So if this is the case, are you getting it? That we need to find out whatever is happening here. I don't need to trade. It takes hours. This is probably short. Are you getting it? It takes hours to happen. So it's not a must that you must wake up the London session and just start taking a trade. I'm not a scalper. I'm a swing trader. Are you getting it? I like swinging 1,000, 500, 200, 100, 200, 1,500 pips, 10,000 pips. I like to go to my bed knowing that if we recover this, are you getting? If we're able to recover this, it will take from, what's it called? From Friday, 28th of July, all the way to 3rd of August. Are you getting it? Which is days that I made happen before we came down again. And I took on that trade when I was saying this, bearish, they're coming back to the supply again. Are you getting it? Coming back to this supply zone again to, take profit before we are seeing this move to the downside right now. So you have to transfer that. So I think, first of all, I have transferred that to EURUSD to tell you why a fake out might happen, because we have a divergence between these two guys already. So this is my immediate structure I'm looking at, and it's showing me a price action pattern. And you remember in my video yesterday, if you watched the video yesterday, I told you that I only want to start selling from this area. So if you have started selling from this area, imagine what might have happened to you today, and your stop loss is on top of this place. You might come and take your stop loss before going down. So I want to sell from my major areas of value where I have my 3 touches on a particular resistance, and I want that particular resistance to break. And even when we are retesting, I still want to go on my 15 minutes time frame to see if I can get a shift and a retest before I continue buying and putting my stop loss to take it to the next level again. So if I should transfer that to gold, I'll show you something on gold that is still making me bearish. I guess on gold right now, we're back to 1922. Kudos to everyone that took profit yesterday at 1916. You know, we took a trade from 1932 sniper entry to 1916, and gold is right now becoming, you know, what, bullish. But on the flip side, we have to look at all the whole case scenario before we can become bullish again. So on the flip side, you saw that this was a bearish, a bullish flag. Getting it that will broke out from, then will find resistance at 1980. So is this going to be another, you know, what's it called? Is this going to be another entry again at 1900? We will find out. Are you getting it? Because gold lost what doing W pattern entry. But as a market structure trader, are you getting it? As a market structure trader that looks at this market very well, I don't just jump into this market without, you know, doing a proper recession analysis, because this was a break of structure to the upside. This was a change of character to the downside. So the market has done bearish for me, for gold. I get. Do you know why I said that? Because if this truly is a bullish flag, then this market was just supposed to go continue breaking structure, then retesting 0.5 or 0.382, then continue going. So right now, I'm seriously massively bearish on what gold, because if we don't look at it from the what's it called, from the flag perspective, or from 0.382 or something like that, you should know that this market was not supposed to. I think I should take some things off, so that I think I should take these things off and withdraw it. Now look at this area, was a major area of value. Are you getting? This was a previous support. This was a previous support, turned resistance, now came back and turned resistance again. So let's leave price action patterns out of it first. Let's look at value, areas of value. Right now, the next value we had was this one. We have not gotten to that area of value. So I still think this market will still sell down. I get it. But I am not being sentimental. You know, I'm a price action trader and market structure trader. So I look at my structure in lower time frame perspective, where the market is not even supposed to pass through again before doing whatever I want to do. So if I drop to my 40 time frame, you see that we've mapped out some areas where market has been breaking structure when coming down ever since. So this market has been what? Breaking structure, broke structure again, then we came back to this major head and shoulders pattern. Now we've broken down again because we've gotten to take profit already. So are we coming back to this major area of value again? We're about to find out. And how do we find out? Let me show you. By dropping to the lower time frame, probably 1 hour or a 2-hourly chart. Now dropping the lower time frame, you can see that there are some, you know, support and resistance that hasn't broken. So you must first of all come back and break worship. That's how you get, you know, thrown out of this market if you are not following up very well. Watch, this was a previous 1932 support. Are you getting that got broken down and retested? Are you getting them? We took this trade from 1932. We took profits yesterday from 1961. We started seeing this selling exhaustion, because consolidation means that it is truly this market came with a very big bang. Are you getting it? Why is it not continuing to the downside? Why are we getting a seller's exhaustion? So the market itself, you know, you have to just, you know, take this market itself, like, because these are for 4 hours, these are 2 hours candles. So let me just say 2 hours candles. These are 2 hours. You know how many hours is this? This started from let me say, from 7 o'clock yesterday, 7 p.m. yesterday So it is enough time for you to go to lower time frame to find the decision of, okay, whatever it is, what is this market doing? Is it trending back to the upside? Yes, you can see that. Or even on a lower time frame, you can even scalp all this off, because let me show you something. When this market got here, we came back and broke structure to the downside, came back to these demand zones. That's what I was trying to show you on the, is it on EURUSD just now? And you see that we came back to this demand zone after seeing try attack to the upside. So we will definitely come back to this $1924 area again. If you are not breaking it and I'm seeing bearish pressure, I'll continue selling to the downside, selling to the $1,900 area, probably selling back to 1914. So from 1924 to 1914 is another 100 pips to the downside. How do you look at your market? How do you see that this is an exhaustion yesterday that is going to trend back to a major area of value? That's why we are here. I get it. That's what you should be doing as a trader. So on the flip side right now, probably use the 1 hour chart, you see that we had a bearish pressure coming from the top. I guess this is a bearish pressure coming from the top. This was a bearish pressure we had coming from this top. I guess, and the bearish pressure has always been this, what's it called? The first one was from this fake out and this break of 19, the head and shoulders pattern. I guess in it, then got back on the retest of that break of the head and shoulders pattern. So has the head and shoulders pattern gotten to destination already? What do? You find out by trying to draw the face, because the market moves in these phases. Bring it here. Has it got into that particular head and shoulders pattern? The head and shoulders pattern might have completed. So as a price action trader, you should know that if the head and shoulder pattern is completed, you will find out whenever we come back to this area and break above it and retest that particular area, then we can come back to this major supply. So how have you been driving your market? How have you been driving your market? Because you don't follow up, or you just want to trade from is support and resistance, support and resistance. It does not work that way. We know we have a head and shoulders pattern that might have gotten to completed to its destination right now. So are we going to do a what's it called? Are we going to do a reversal back to the upside? You can also bring in your RSI to help you also. Look at the hourly RSI. The RSI on the hourly is telling you that the market is oversold already. So are we going to come back, buy back to be on overbought before we'll start selling down again? These are indicators to help you, understand. So if you have not taken a buy trade all the way from 1916, 1914, hold on. It's not a must that you must take it buy. Are you getting it? Just hold on. Wait for the market to do what? Switch back to the upside before you start buying again. So you don't have to hit yourself or rush into this market this morning because you are a London session trader or you're a New session trader. Wait. Look at, we have a previous what? We have a previous what? We have a previous area that was broken down already, because this was a previous area that was broken down. So if we look at the flip side, we can see that, okay, let's see if we're retracing from 0.5 or 0.618, and you can see that it's aligning perfectly with your area of value. If it's going to break down, it will tell you, because there will be bearish, there will be red candles bigger than the green candles in those areas. Are you guessing it? So you can even take a trade. You can take a sell trade from those areas. If I can, you can take a sell trade from these areas. Are you getting it? And say that, okay, I'm risking how many pips from 1923 to 1926? Are you getting it? On 1927, are you getting it? 40 pips, and you want to take this market to probably 1910 or 1908. That's still a 3 risk to reward ratio. Are you getting it? Maybe, or say, okay, I'm swinging down to 1,900 because that particular area failed. And that's the 4.7 risk to reward ratio. Are you getting? So how are you taking your market? Because if that prevails, that means that if that 4.7 risk to reward ratio prevails, that means that this bearish pressure trend line. You just have to put everything together. You just have to be glued into the market. Let this market be your major, friend, not the outside world. Because the moment you are not focused on whatever is happening in your chart, you get carried away. This is how I've been driving my chart, you understand? So I'm still in some positions though, because I entered from 1932. So if it's going to fail, are you getting it? My trailing stop is up here. So if it's going to fail, that means now I know that I'll be jumping here and there, this and that and that. Are you getting it? But look at, if this market is truly going to come back to 19, after exhausting the head and shoulders pattern, it's going to come back to 1944. This area will break and break this bearish pressure trend line on the lower time frame, and retest that, making this particular place a support again, like it did on the dollar. Remember, like it did on the dollar. I get regaining that particular place again, retesting before it will do what? Start coming up here. So if you are seeing a particular bearish, which with descending channel break and retest, it's telling you that I'm taking you back to where it's going again, because this is a face. Are you getting it? If you carry it, you see that it's taking you back to these particular areas of value again. So know how you trend your market. Don't just get carried away because of what the higher time frame is saying. So you can use your lower time frames to trend your market and know where you want to sell or buy from. Are you getting it? Because right now, why is this place? You can ask more questions again by why is this place break? Why did this place break? It dates back now. That's where your sentiment comes in, that okay, why did that place break? Let me go and check my bullish case, what scenarios. I get in, since I've been checking my bearish case scenario and I've seen that this place break. You can come back and say that okay, let me come to my daily chart again and try to find out what is happening. If truly this is an impulse, still an impulsive move, are you getting it? If truly that's still an impulsive move and is breaking a structure changing character back to the upside, are you getting it? Let me find out by coming to my, what's it called, to check where, if this was a discount zone, because anything that make us break a structure without continuing to the downside, that particular structure are showing to the upside. So on the flip side, I would say that okay, let me check from here to here and see whatever happened. Are you getting it? You can see that this market is at a 0.7, the last result of the bullish market. Now, this is where you know this is the last result of the bullish market, 0.786 area. If this market changes character back to the upside, this market has turned back being what? Bullish, and you will now start seeing all these areas that you did not draw down ever since start holding, start breaking, and start holding, and continue going to the upside. So these areas I've drawn down are my footprints that will help me to if I was in a loss already, that will help me, show me that okay, this was a particular area that was a particular, what's it called, is a previous support that has broken turned resistance. So if we recover any particular support or the upside again, the market has done was turned back bearish, and indeed this was a bullish continuation pattern. But for you to know that this market will go to 1880, you will see that when we get to this particular trend, this particular market that has been trending perfectly well, you will see the market rejecting from every broken particular structure. Every broken structure will do what? Start selling down. Are you getting it? And continue what? The trend it has been trending. Are you getting it? Continue what? The trend itself to the downside. Because if this particular area, as it stands right now as a market structure trader, if this particular area breaks or it comes here and it still break down, are you getting it? This market will do what? Continue breaking, and you start saying that this area now will now turn to what again? A support area again. Sorry, a particular support area again. And if you continue breaking this particular support right now, might break from here or might still come back here and continue breaking to the downside again. So watch your areas of value on the 4-hourly time frame. Are you getting it? This is a small one safe, so I might not even look at that. That's why I said always be on the 4-hourly time frame structures. They will tell you what they want to do perfectly well, because if I was in the 1 hour right now, I would have considered this to be a major one. So I usually do my 4-hourly time frame structures. Are you getting it? And don't focus on the lower time frame structures, because they may tend to what? Fail. That's why I tell you that sometimes this one hourly structures tends to do well because the one hourly structure is very clear here right now. So the momentum is using to come, might break here to the upside, retest. Are you getting it? And say, oh, we have retested. Let me take a trade all the way up. We might get here right now, reject, and continue going down. That's why it's good to not, focus on your what's it called, lower time frame structures, but focus on your 4 hourly structures because those structures are more clearer than the lower time frame structures. So if you have taken profit from 1916 and you took a buy, are you getting it? You will say that, okay, these are 4 hourly structure. What do we do from here? Are you getting it? What do we do from here? Is just to focus on what the market is telling us from here, that we're overbought on the 4 hourly, we're oversold on the 4 hourly, and we're buying back to these the middle line again. These are indicators. So if we get here and you are seeing those rejections, it means that we might have gotten here or we might have gotten here. We are seeing those rejections. So I'm still seeing this market doing what? Coming to the downside, not in this area again, because if we are rejecting from this area, I will not see this large green candle, this 4 hourly green candle here. So we might be rejecting from this area, but watch your right time frame very well and use your Fibonacci retracement tools again. I get me, because if this is truly a structure, remember we broke down, we tested from here. I get me, we broke down, we tested from here. So this is where we should look at right now, from here to here. I get it, which the 0.5 is saying that we might be coming back to $19.32 area. Are you getting it? So watch these old areas though on the lower time frame. Rejections might happen in those areas, but your time frames, it will give you 8 hours to decide if you need to sell from there or you have to come back to 1932 to sell from 1932. So I'm still waiting for the market to come back to these areas and sell down. Are you getting it? Sell down to maybe $1,900 area again. Why am I saying that? I'm not contradicting myself. Don't think I'm contradicting myself by why you first of all said that we might sell from 1924. Now you are saying that we'll sell from 1932. That is because I was looking at the 1 hourly time frame before. Are you getting that? I'm not a fan of trend line. I'm a fan of areas of value. So if I should take these things off right now and say today is a fresh day, this is what I have. This is what I have. I guess this is what I have, because this is my 4 hourly chart. My 4 hourly structures are the ones I trade. I follow my 4 hourly structures. I don't try to look at internal structures. So this is what I have for you right now. So the 4 hourly structure, this is the trend line I have on the 4 hourly structure. This is the trend line I have on the upper side. And this is support I have on the 4 hourly structure. So are we coming back all the way to 1940 to 1950 area? That would make more sense to me on the 4 hourly structure. Are you getting it? Not this smaller one, not this one. Are you getting it? So I would love the market to come back here. So I would love my market to come back being oversold. Are you getting it? Before coming down again, because the 4 hourly structure helps me in determining whatever is happening in this market. So if I want to take a buy now, I just take a buy, put my stop loss below here, which is like 100 pips, and try to take from 1920, are you getting it, to 1940, which is 200 pips again. So decision making is the most important thing after learning how to trade the financial markets. Are you getting it? What decisions are you making? How is your decision making like? Are you getting it? Right now, same thing is happening on EURUSD. If EURUSD turns back and break above this, are you getting it? The market will turn bullish again. Is that what the market wants to do? You just have to follow price action. Are you getting it? Follow price action, because this is a previous resistance to resistance. And at the flip side, we are seeing the head and shoulders pattern break and retest. Does the market want to come back to this area before selling down again? Just take all the price action. Are you getting it? You can see. Take all the price action phases. You can see a retest, take profit here. That's about another 100 and something pips again. That's enough for you to swing. Not scalp all those 20, 10 pips that you might get you out of the market, because if you wanted to scalp those 10, 20 pips right now, maybe you would have remained on the 1 hourly chart, on the 15-minute chart, and saying that, okay, whenever the market gets to this area, I'll take a sell down, I guess, and try to take from 1925 to 1950, 100 pips, and the market blows off. You've taken that loss. You want to enter again from here, the market blows down. taking on that loss again without knowing the swinging of what the 4-hourly chart is doing, because you cannot swing the 4-hourly chart. You want to swing the lower time frames by wanting to take everything you see on your lower time frame. Probably you not even use the 1-hourly chart. You probably remain on the 15 minutes and say that, oh, okay, whenever this market gets here, you are seeing that rejection. Instead of you taking just 20 pips, you'll be greedy and want to take 50 pips. Are you getting? When the market gets here, it will definitely react. Are you getting? Probably 20 pips from 1923 to 1921. You can take that as a swing, as a scalper. Are you getting? Take that and leave. Take that and leave. Probably did I draw that in very well? Take that and leave. Are you getting? Take that and leave, because it just happened just now from 19. Are you seeing it? From 1922, we came to 1920, 20 pips. Take that and leave. So I don't want to put myself into a scenario that I must make sure I'm gauging all these ones, because this market might just, you know what, remember, it's trending perfectly well. It might just continue to the upside. I don't want this kind of money. I don't want this kind of money. That's why you see that I'm a swing trader, because I want my structures to be precise. I want my money to be intact. I want to put enough stop loss into it without scalping. So I'm not saying that scalpers are not doing what day traders are making mistakes, but I like my market to be what precise. That's why you see that I'm a swing trader without running emotions every day about whatever is going to happen. I want to go away for days, gain my sanity back from whatever I'm doing right now before I can take more trades again. So my gold is loading. I don't know what's happening. My entire browser is messing up, so I might pause and come back. Hold on. It's not even just my browser. I think it's my entire system is messing up. So hold on. I'll check this trade. Hold on, just a few minutes. So probably I'll do editing and cut this whole area off before I continue another trade again, another analysis again. So, wow. Okay, we're back. I really didn't want this to. I really don't want this particular. I don't know why my video keeps getting longer. I guess my videos keep getting longer, but definitely, you know what we'll do. After the market has, after the market has completed its phase movement, we usually come back. I get in the back. Now, look at, if you are a head and shoulders pattern trader, price action trader, you would have known that this particular phase, where is it? Do I draw that particular thing very well? This particular phase is completed. The sell phase is completed. So the market will have to do a retracement back. This particular phase is completed. So the market will have to do a retracement back to a particular area of value, probably each of these areas of value. So where should you be selling from? Don't sell from this first one. Sell from either this middle or this middle. Are you getting? Anyone that you are seeing rejections, that's where this people that the sellers want to sell from. So sell from those areas. Sell from those areas, not these ones that you're seeing immediate price action happening right now. So I would be glad if we could recover this particular 1 hour area of value. If we recover it, recover this 1 hour area of value, we test it and take first profit here, then take second profit here. So whatever it gives us, we know we'll have about 100 pips and another 100 pips again. So that's how I look at my market. That's how I look at my market. This one is good. I think we're done with gold. We're done with gold. So let me go to pounds USD, GBPUSD. GBPUSD also, look at the 4-hourly chart. That's why I love the 4-hourly chart. My 4-hourly chart is even showing me something clearer on GBPUSD. If I should go to the 2-hourly time frame, if it can take me there very fast. I don't know what's happening to my system. Just hold on. Ooh, what is happening? Reload. Okay. Okay, this GBPUSD, GBP, hold on, GBPUSD, pounds USD. So on the pounds USD, what are you saying? What are you saying? Let me first go to the daily time frame. You can see that the daily time frame is, we came into these support zones, and definitely we found a doji sorry, is shooting a hammer. See the hammer buy. This is a bullish signal. So how do you know that pounds will go back, into a bullish phase? Is if it breaks and change character to the upside by breaking a particular price action pattern. And what pattern are you seeing here? Can you see any pattern? What pattern are you seeing here? First of all, the only way you can know pattern is connecting the dot. I usually use that word, connect the dots. And what's the dot? This was the previous low we had, and since then we had what? We had what's it called, resistance on that particular zone. And what's the resistance area? You can see it was a previous support. I guess support, resistance. Those are particular. If you draw it back, you see that this area was what? This area was very important. I get it. Right now, the immediate thing we want right now is this immediate price action. This was a particular support that turned resistance. Now we're coming for resistance again. How will you know this market is going to, that particular daily, what's it called, hills? Connect the dots again. This is where you will now connect your dots. So look at, we've brought out a particular, chart pattern. What is the chart pattern? This is a bullish reversal chart pattern, right? This is a bullish reversal. An ascending triangle is a bullish reversal chart pattern. If it breaks out and we test, this will not be our entry. Our stop loss will be below here. So our stop loss will be like maybe 100 pips stop loss. Break above, we test. I guess our stop loss is below here, and our take profit is back to this what's it called, this high. So GBPUSD is clean. I wish I can just, this one was even shorter to you analyze. These are the kind of trades I want to take, because this was what a previous support level. So GBPUSD was even clean safe, and we got back, we bounced from that area. But the only way this particular, for you not to be thrown out, the only way this particular trade will prevail is if you see a breakout. Are you getting it? And we broke out, retested this particular, we must come back to retest. Are you getting it? I'm a conservative trader. I'm not even after the breakout, I'm not still an aggressive trader. I still want to be conservative, waiting for a retest, and even on the smaller time frame, I want to see that switch. I get the change of character back to the upside so that I can enter and put my stop loss below it, even though it's 100 pips. I know I have 100 pips to eat, and I'm taking probably how many risk to reward trade. I get it. So if I bring my risk to reward inside, you see that if I'm taking a trade from this particular area, I'm putting my stop loss below here. Are you getting below this at the same triangle? And where am I taking it to? I might be taking it back to this, high again. Which, how many risk to reward? 4.5 risk to reward. So if I'm risking $1,000 to this, I'm making $4,500. This is how the market trend. These are the market trends. So using a multi-time frame analysis, a multi-asset analysis, is trying to tell you that if this market breaks and retests to the upside, which means that EURUSD will also do what? Break and retest the head and shoulders pattern to the upside. Now, comparing all of them together right now, if GBPUSD break and retest to the upside, EURUSD break and retest to the upside, then gold does what? Break and retests to the upside and continues, EURUSD falling structure also breaks to the upside. Are you getting it? And reclaim again. Are you getting it? Break again and reclaim again. This is my major reclaim. I even want to buy from $1944 area because it's a previous completion of a head and shoulders pattern that might continue on the bigger side. Are you getting it? So I look at my bigger time frame, not using my lower time frames. My bigger time frame, if I should use EURUSD, for example, it means that we did what? We reclaimed back into this particular structure. Remember, we are not leaving the structure behind. Remember, you have to remember all this particular previous support that turned resistance, that now turned support. Are you getting that? Broke again and turned resistance. So this is your flex. Breaking back to this area, either, breaking back to this area and finding, now you now see that this market might travel all the way back to 1940. Are you getting it? Are you getting it? So it might travel back to 1940 or 1932 before breaking down again. Are you getting? So you must know whatever the market is saying, because if the market gets to 1940 and this one gets to all these old areas again, we might still break down. Are you getting it? Or pounds gets and gets back to this area. Look at it. Or pounds get back, break, and continue going, and you think we're coming back. We might get to all this area and still break down. That's why you see me sometimes talking about multiple assets. We might get back to this area and still break down. So I use multi-asset analysis to look at my markets. To tell me if you gold is actually doing this, what's it called? Breaking and getting a 1 hour the daily bounce, definitely we're going back up. So I will just apply that to my euro USD. Definitely I know we're coming back up. Then apply that to my gold, that definitely I know we're coming back to this area. Are you getting it? So this from year to year right now, 1940 to 1940 is as big as the pips that's coming back to this area or coming back to that GBPUSD area. So how do you apply these markets? I guess how do you apply this market? How do you apply your knowledge to this market, knowing that you don't this your major areas of value, you don't play with it. But on the higher time frame perspective, are you getting it? I'm seeing us coming back, even coming back to 1944 and still breaking down, or coming back to 1932 and still breaking down. Why? Because I don't think buyers are still interested in this breaking of this 1940 area, even though this is a major discount. So you can, as a swing trader, swing 100 pips out of this or 200 pips out of this. I guess it depends. 1920 to 1930 is 100 pips. You can swing it and take profit and wait for whatever is going to happen in these whole areas. If bearish pressure is going to come in, or bearish pressure is going to come in from here. But according to whatever I'm saying on this channel, I'm saying that we're recovering and coming back to this area before trying to see if we can fall down again to 1900 before we can start going back. So that's why you see me not talking much about my lower time frame trends, and I don't want to swing my lower time frame. I only want to swing my higher time frame, because that was what makes sense. That's what actually makes sense. Because if you look at the analysis we've been doing on gold ever since, I want to make sense of it. You will see that this was a head and shoulders pattern. Are you getting that broke? Head and shoulders pattern that broke to the downside. So is this a retest? Are you getting that is about happening right now? Yes, I think conclusively that this is a retest that is about happening right now. So I'll take all these guys off. I'll bring it back, but I'll take all these guys off and just say that, okay, definitely we are able to swing from this place to this place. So this phase is either completed, yes or no already. Definitely, are we coming back to this area? Is if we break this, we test it. I guess it we might come back to this area before coming down again. So a lot of people might have taken from 1932 right now, putting their stop loss here. What if you come back? Because you're not supposed to be trading from inside. You're supposed to wait for your major areas of value sell. Probably you're selling from 1942. Are you getting it? You know that we might come back up. Your stop loss is above it or above this structure. I guess your stop loss is maybe 100 pips above that. Then we might definitely come back to this area. Not when you will now start coming back to 1932, you get disappointed. Oh, if I have known and are taking profit here. Those are internal structures. That's why I said remain on what your 4-hourly structures. It makes sense the way I'm driving it right now, because your 4-hourly structure is still coming back to your major areas of value. Are you getting your major areas of value? So anything that makes us shift this, just leave. If you are in a sell, leave, or you can take profit now, leave. I guess and wait for whatever he wants to do. Probably wants to buy back. He might want to buy back to this area, but this is a major area of value on the 4-hourly chart. So whatever I want to do right now, I will just see whatever happens here, take profit, enter, buy, take profit here before we can come down. It makes sense on the 4-hourly chart, right? It makes on the 4-hourly chart. So that's for GBPUSD. AUDUSD, do we have anything? This is a weekly. Let me go to the daily. Do we have anything? Let me go to the 4-hourly. Okay, the 4-hourly chart on AUD USD is saying that our previous, for AUD traders, these are our previous support that has broken and turned resistance. So, and this is a major support from the flip side again, because this was where the market did what? Head and shoulders pattern. So if I can expand that, this was where the market switched to the upside. Actually, we are back to that particular area again. So this was what switched the market to the upside by doing this, what's it called? Major area of value. So this place is very, very vital for AUD USD. This place is very vital for AUD USD. Look at, this was where the market did the head and shoulders pattern, then switch, we tested. I get into, since we are back to these areas, we've taken this particular liquidity before. So we are back to this area again. So if this place is going to be a fake out and continue this market to the upside, we're about to find out. I guess, because I love looking for liquidities that will happen. So if truly this is a what's it called, a fake out concept that is happening, you see it happening like this now. Do a price action pattern or just do a W pattern. I get in break, retest, enter, stop loss out below here, then take it to the next major area of value again. So it's as simple as that. Take it to the next major area of resistance level again, or probably you can use, what's it called, your triangle, and say that, okay, I'm taking probably from 0.6590 and take to 0.68, what's it called, 13. That's about another 250 pips to the upside. So the market moves in these phases. So you can do a multi-time frame, multi-asset analysis, and just use that to drive your market. Same thing for NZD. Same thing for NZD. NZD on the weekly, NZD on the hourly chart. The hourly time frame is sweet to me for driving my markets, because NZD has been on the lower time frame. Sorry, NZD has been, what's it called? NZD is all this. That's why I just love trading on the asset. I guess because this is a previous area of value. I guess this was where the market switched to the upside, came back. So this is a support, this is another support. Is this going to be on that support again? We're about to do what, find out, because if there is a support and we'll have our last result here, we'll come back, reclaiming it, change it straight out to the upside 0.382, then we'll continue and trade this market back to our previous resistance zones. Well, that's what I have for you today. So I'm just going to look at probably EURAUD. EURAUD did our 1,000 pips to the upside. Look at, be on your higher time frame. This is an impulse. Look at, this is an impulse. This is a retracement. So on that impulse, you come again. So I give this trade from 1.5885. I think here 1.5885. Then I told you that if you can swing it from the month of June 15th, go and check that video on June 15th, that definitely EURAUD on the swing trade will come back to these major areas again. So from here to here right now is about 1,000 pips, 2 months. I guess it took 2 months to happen, 2 months, 1 month and a few days to today's 10, so 5 days away from 2 months to happen. I get it. So if you have a $1,000 entry on this account, or if you have a $1,000 account and you took probably one lot trade on June 15, definitely you have a 1,000 piece movement with about $6,000, $6,600 on EURAUD, because one pip is about $6.6 on the what's it called, EURAUD. So this a $1,000 trade, you enter sniper from this area and you took probably 85 pips. So no, the one lot is too much on the $1,000 account. Let me just say, even a 0.1 lot, you used a $60 what's it called? Yes, now 100 pips is $60, and you reach $60, you would have made about $660 on this 1,000 pips move. Are you getting 0.2? Or probably on that $1,000 account, if let's say you reached only 10% of that amount, probably say let's say you reached $200, $2,000, that's 0.3. 0.3. What's it called? $660 times 3. That's about $1,900 plus you'd have made on this account. Or probably let's say you have a big account and you took a one lot trade, that's about $6,000. You have a $10,000 in 2 months, you made $6,600. It's 1,000 pips. happened, and it's not going to end there. Because why? Because if you use your Fibonacci trend extension, first of all, let's use our Fibonacci where you trace from. Fibonacci, the market actually did an impulse retracement. Impulse retracement is 0.618, corresponding with this area of value. Go and watch that June 15th, June 14th video. You see it there. From this area of value, we're doing on that impulse again. So if there's an impulsive movement, where is the market going to? 0.618 or 0.786 from here to here, and drop it here. So we have at our first take profit already, and our second take profit is at 1.7069. Let me also 60. I get from here right now. How many pips from here to here? 800 to 69, 207, 260 pips. Added to 1,000 pips. It's 1,260 pips. This market might get here, but whenever I take profit on 0.618. 1,000 pips is enough for me. So let it drive. I get me breaking the structure again and probably coming back to this other block area. I get me. Let me just do something. So let it drive. Then you can actually use your Fibonacci again to measure that, okay, if it gets there, I guess if it gets here, I'm coming back to, sorry. If it gets here, you know that we are retracing back to 0.5 to enter again to continue this market to the upside, which will correspond with our trend line from the downside. Look at it. So this market is clean. EURUSD is clean. Sorry, EURAUD is cleaner to me. That's why I've been trading it much. You know, I've been talking about it much. So if we take all these guys off, you see that EURAUD is clean. It's either you use that one or use this one. You see that EURAUD is what? Clean. Clean. This 69, 69, 69, 69. Hold on, 69. You see that EURUSD doing that impulse, come back as retracement again to this 0.5, 0.618 kilo zone, also corresponding with this trend line, and buy again. So it's cleaner. So instead of if you are ever confused on your USD pairs, there are other assets that are what still clean to you, because on the downside, I'm coming. Sorry. On the flip side, you see the market trending perfectly well to your favor. You see the market trending perfectly well. So either I take this or I take this. Okay, let me take this instead. I guess look at clean. Trending perfectly well for you. You're the one that is failing to analyze it correctly. This trade is, this video is up to like 1 hour again. What the fuck? Clean. Look at clean. I'm on a trade all the way from the down here. Look at clean. EURCAD. Support, drive, found resistance. Came down, support again, drove, found resistance here, coming back here again. So internally, the market is doing an ABC move for you. Clean. I guess these markets are clean. Definitely we'll come back here. I guess we'll come back here before, but the market did not break down. So instead, we're coming back here again. EURCAD. I guess it's clean. So the market might just do whatever it wants to do. There are some other assets that you don't even need to trade USD pairs. You're the one that is not looking them perfectly well. I guess look at it. Found support. So it's going back. So if you have been on this chart from 500, this is 773, that is 273 pips in profit already. And we are coming from 500 to 5,000. So how many pips is that? About 500 pips to the upside. Clean. Good swing. Leave that to run. Leave it to run. Very clean. Are you getting it? So I'll stop here for today. If you have another asset, I know I've talked more about it. My group enjoys me talking. Are you getting it? I mean, I love talking also because this is what I do. I don't have any friend. This is my only friend for now. Are you getting it? The reason why I took this trade was because we came back to this area. Are you getting it? Previous resistance. We turned it to do a support by doing it, what's it called? Retrace a little, and we are going back. Some people take profit from here. There's no point because when we get here, We'll also find the resistance back to the downside. I know we'll continue going again. So I'll leave that trade to run. I don't need that money right now. So clean. Use your higher time frames to drive your markets. I get it. Gold is still going up, definitely. It will continue going up. So this is what I have for you today. Any other questions? We are overbought, oversold already, so I'm expecting us to continue going up. That's why I use my follow chart. Any questions directly to me? I will take it up from there. So I want this to happen. Then let's come back to 1,900. Come back again. I guess I don't know. It might not be as big as that, depending on the volatility of the market. I guess so. I just want to sell from here, take profit from here, take another trade again, maybe to 1932 area, sell again. I guess take profit from here, take another trade again back to that supply, then sell to the downside. Or anywhere I'm seeing a major 4-hourly shift. But right now, this guy is bearish. I guess gold is bearish and might just come back here, continue breaking structure, then continue selling to 1880. I guess so. So that for you for today. Any other further questions, let me know. Or on the bearish side, remember on the bearish side, we've not completed this bearish phase yet. From here to here, we're coming to where? $1880 area before probably selling back on the higher time frame. So what is your volatility index telling you? Use that also. I will not teach you that. Okay, this is where I'll end this video. Take care and bye for now. My name still remains the CEO of EURUSD Limited, one of the best guys in the market right now. We're coming full force. Are you getting it? We've not gotten to our destination yet. Are you getting it? Take care and bye for now. Bye.